Well, thanks for joining us, and happy Monday to you. I'm Marlon Bowling, your tour guide to the ag commodities. Well, we had a weekend to catch our breath and kind of recuperate after a very busy week in the ag commodity markets last week. We have Brian Hoops on the line with us. He's the president of Midwest Market Solutions. He's based in Springfield, Missouri. And well, Brian, let's talk about things. We had the Pro Farmer Crop Tour that wrapped up last week. We'll talk about that here in just a little bit. We have, from what I understand, harvest is actually starting to pick up in some areas. Over the weekend, I heard all kinds of stories about the massive drought going on in China that you really don't hear all that much about in our mainstream media here in the U.S. But tell you what, international sources I was following over the weekend, it's getting pretty dire over there. This is something that I'm not sure, when you look at it from the producer point of view, this is getting really serious. What do we do with this?
Yeah, good morning, Marlon. I had a client just south of Council Bluffs area contact me over the weekend. He was combining some corn. Yields are coming in about half of a year ago, so real disappointing. But very dry moisture-wise, it's really dry. So we're starting a couple weeks early, and really no surprise that the crop is going to be much poorer than expected. But a lot of clients are asking about this Pro Farmer Tour. Why are we not only up 10 cents? Why are we not seeing bigger gains overnight? For most of the night, it was 5-cent gains. But, the 168, if you take that on the surface, that is a real bullish number. But is that going to be the actual number? Now, historically, the tour has come in under the actual USDA number 7 out of the last 10 years and something like 16 out of the last 20 years. So they usually report what the actual number is from the government. The average over the last 10 years has been by about 2.5%. So if you add, do some math and take that 2.5% and add that back into the Pro Farmer Tour numbers, you come up with like a 172.6 or 172.8 type of crop. So certainly down from the current USDA number by about 2.5 bushels, but it's not that real disaster type crop that the Pro Farmer Tour is forecasting, or that DTN forecasted as well. So, numbers always subject to change, but it's something that I think is going to be bullish for prices longer term. But it's not. It doesn't have to be bullish right now because we still don't have that actual harvest data yet.
So I heard late last week that they're doing harvesting in southeast Kansas, and you mentioned you had heard some in Omaha. So I mean, things are starting to get underway already. Doesn't that mean that nearby basis, the cash basis at the elevators, is just going to collapse here anytime soon?
Yeah, I don't think it's going to be a collapse, but especially in that Western belt. Producers have crops sold. That's already contracted. That won't really affect the basis, I don't think. The rest of the crop is going to get stored in a bin, and it's going to get locked away pretty tightly. So I don't think we're just going to see a lot of farmers dumping crop on the marketplace. That would collapse the basis, especially this Western belt. It's going to be extremely tight. There's a lot of demand for the crop. As I mentioned several weeks ago, down in Joplin, Missouri area, they were cutting for silage and begging for corn from anywhere, and that has not changed. And there's also, incredible basis levels in Northwest Iowa looking for corn. Even clients out in Idaho talking about $4 positive basis because, they have a lot of dairies out in Idaho. It's the third largest milk producing state in the nation. So they're looking to rail corn in, and it all comes out of that Western belt, which is going to have a really poor crop this year.
$4 basis. I never in my life have heard of anything like that.
Exactly.
Wow. Okay. Well, let's take a look at our prices overnight here. These quotes are from Bar Chart, and you left me speechless on that one. On the corn, let's start with December. The December corn was 10 1/4 higher, as you mentioned. It was at 674.5 here this morning. So a good, strong market overnight. It was just one tick off of its overnight high. On the other hand, you had the soybeans that were under pressure, with November going down 8 1/4 cents at 14.53. And in the wheat market, we'll start with Chicago here. You had the December contract 3 cents higher at 8.08 1/4. In Kansas City, we had that same December contract going a penny and a quarter higher at 8.83 Minneapolis spring wheat last night had December 3/4 cent higher at 9.10 1/4, so just kind of treading water there. In the cotton trade, you had the December 129 points lower at 116.39. Just wanted to point out what the Dow was doing this morning. A little follow-through selling here after that big washout we had on Friday. Dow September futures down 218 points, now down 215 at 32,048, barely hanging on to the 32,000 mark now. U.S. dollar index down 151 points here this morning, and the West Texas Intermediate crude, we now have the October up $1.49 at 94.55 per barrel as it continues to inch back upward again. Well, Brian, we'll come back and we'll talk about the other side of the ledger, what to do about the livestock markets when we come back. All right, we're back talking with Brian Hoops of Midwest Market Solutions. Brian, a moment ago, I was talking about how we had a lower trend early on here in the equity markets this morning. And let's take a look at the livestock markets just to get a feel for where we finished up last week and how we may start out this week. Now, remember, we were lower on live cattle Friday. We had October down 60. They were at 143.05. When we wrapped up last week on feeders, the October contract down 212 at 183.40. So a lot of pressure on the nearbys as we headed into the weekend. Lean hog trade, you had it mainly higher, except for the nearby October. It was down 45 cents. The other months were higher, December 32 higher at 82.95. So what are you looking at when it comes to livestock trade here this week? Is the equity market going to weigh on livestock trade?
Yeah, I definitely think it will have an impact on the cattle market this week, Marlon. You know, on Friday we had a sharply lower stock market, and I think it did drag cattle off their highs and produce an outside day lower. And we're going to have additional pressure again this morning. Corn was higher Friday. It's higher again this morning. That's going to be a drag on these cattle and feeder cattle markets. Plus, you have a holiday shortened kill week coming up with Labor Day next Monday. So packers buying for a smaller kill week. Probably going to see cash trade steady to lower this week, especially starting off out of the gates here. It looks like we're going to start lower with the higher corn prices and the sharply lower stock market. So it's going to be a tough week, I think, for the cattle market.
Just real quickly here, Brian, during the break, you mentioned there was some Stats Canada information. What was it, if you want to pass that along?
Yeah, it updated the wheat crop estimates for Canada, and it's a much higher number than a year ago. Of course, we had a drought-stricken crop last year, but about 34.6 million metric tons of all wheat in Canada. The USDA is at 35, so it's not really a surprise to the trade, but might have bounced the wheat market a little bit higher overnight, along with the corn trading higher.
All right. Well, thanks for sharing that. I appreciate that. Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri. Oh, boy. Going to be a busy week again, I can tell already. Janet, I'll turn it back to you.